Welcome back to another episode of Harmonious at Lunch, the show that fuels your business success. I'm Brandon Gano, your host and guide through the world of harmonious business growth. Today, we're unlocking powerful strategies with industry experts to help your business thrive. If you're a business owner, entrepreneur, or executive, you are in the right place. Join me and our incredible guests today on the journey to clarity, growth, and success. It is time to revolutionize your approach to business. Let's dive in with another episode of Harmonious at Lunch. Welcome back to some more bite-sized business advice. This is going to be a little bit more than bite-sized for sure. This is a fantastic episode, and I have an amazing guest lined up. When we were chatting beforehand, I said, what do you call yourself, right? We're going to talk about numbers. We're going to talk about understanding your finances to grow your business and be more profitable. And he said a bunch of boring things like maybe a business consultant or a financial strategist. And then he lets out, or, kind of, I'm the numbers whisperer. And I was like, that is who we're talking to. Avi Pinsky of Pinsky Consulting, the numbers whisperer. Before we go any further, Avi, I've embarrassed you. Welcome onto the show. Thank you for being here.
Thanks for having me. Not embarrassing. I guess, some people that might be a bit of a dig, that, you're a numbers guy, you're a little bit of a nerd or whatever. I enjoy numbers. I always have, I always will. Sudoku's my favorite game. And just because it's got numbers there the whole time, so I'll wear that badge with pride.
So you go the whole nine, right? Like your favorite games are only the ones that focus on numbers. This is going to be awesome. I love this.
Yeah.
I'm excited to dive in.
Sure.
So we are talking about demystifying the 5 numbers that separate your profit from your cash flow. So, we were kind of talking about this beforehand, and I said I am curious to dive in and find out, because numbers and your finances in business can be complicated. I know a lot of people, a lot of entrepreneurs, they get into it because they love the product, they love the service, they ignore the business side, and that's when disaster strikes. And then we start saying profit and cash flow, and they're like, I'm going to go just curl up in a hole and never touch those things. So before we dive into what those 5 things are, in your words, I want to hear the difference between what is profit and what is cash flow, just so we can clearly define it.
Yeah, for sure. So I think profit is generally understood by business owners, even if they don't have a background in business, right? That carpenter that decides to go on his own and start his own little workshop, that plumber who's been working for 20 years and decides, I don't have to work for this other guy, let me do it for myself. They still understand the concept of revenue and profit. Everybody knows revenue is what you bring in, profit is after you pay off your expenses. But cash flow is kind of that thing that is a little bit less understood, but unfortunately it's the most important one. It's essentially how much money do you have in the bank at any given point in the month, in the year, in the week, depending on how your business works, how close you are to zero, and how much money you need on balance to pay your bills. So how much money comes in on a regular basis, how much money goes out. And that's kind of, cash is king. Cash is the gas that powers the fuel of business. And if you're not looking at your cash balance on a regular enough basis, and you don't have that flow that's coming in regularly, unfortunately that can really negatively impact the business. And from my experience, it's the number one reason why most businesses go out of business, is because they aren't keeping a good enough track of their cash, and they run out at some point. And even if they might be profitable, right? You look at all their expenses and all their revenue, and they're like, well, I should be making money. At the end of the day, they look at their bank, and if it's at zero, it's at zero. There's really nothing to do about it at that point. So that's kind of how I would define it, right? Profit is what everybody thinks of, your income minus your expense, but cash flow is, okay, practically speaking, what money did you get at the end of the day?
Yeah, and I think it's interesting because I've talked to a number of business owners, 7+ figure business owners revenue, and they're really proud of the business they built and the profit that they show on paper, but the profit that your CPA hands you on that P&L statement doesn't look so good when the numbers in your bank account are in red. And that happens
Exactly.
a lot of time. How often do you see that?
I mean, it's really, it depends on the business. Some businesses it happens more often than others. It's going to depend on a couple factors, and every business is different. Every business is unique. But there's general principles that you can, if you can be aware of them, it's easy to avoid. But only if you're actually paying attention for those variables. If it's something that you're just kind of letting things go and letting the business control you instead of you controlling it. So things can get out of hand, and that's when problems happen.
Yeah. All right. So enough of a tease. Let's dive in. I want to hear the 5 things that separate your profit from your cash flow. So you run the show. Where do you want to start? You want to list them? You want to go through one by one? What's the best way to tackle them?
So maybe I'll list them first, and then we can
Let's do it.
deep dive into each one if you want. And now again, like I said, each business is unique, so not every business is going to have all 5 of these factors. But we're talking general business terms, general business structures. You're going to have most of these, if not all of them. And the first one is going to be your accounts receivable. Right? Accounts receivable essentially is what people owe you that they haven't paid you yet. So that's going to affect your cash flow. Another one is going to be inventory if you're in a manufacturing type of business or any inventory heavy business. Then you have your 3 basic building blocks of your balance sheet. You have your assets, your liabilities, and your equity. All 3 of those can move in a way that's going to affect your cash. Each one's going to have its unique aspects to it, and each one's going to be a little different. But that would be the 3 to round out that 5. So your accounts receivable, your inventory, your assets, your liabilities, and your equity.
All right. So I want to dive in because I think everybody who's in business has at least heard these 5 terms. The degree that we understand them will vary. And I'll say this. How about this? So usually we do this at the end of the show, but if you don't know what any of those 5 terms are, I just put Avi's website on the screen. It'll also be in the show notes. If you're listening, it's pinskyconsulting.com. Go there. There is a freebie you could download, and I'm sure he's going to explain all of this. But let's kind of dive in here. So what are the ones that you find that are most overlooked or most misunderstood in the businesses that you consult with?
So in terms of the understanding, these are all fairly ubiquitous and simple concepts that everybody understands what an asset is. They all understand what inventory is, but how it affects your cash flow is something that is a little bit less understood. The biggest problem I would say is probably going to out of these 5 would probably be the accounts receivable, right? And that's again where somebody owes you money and they haven't paid you yet. So if you're looking at things from a profitability standpoint, so you got this revenue and you're owed this money, but if that person doesn't actually pay you, your bank balance is not going to reflect it. So then when you now owe a third party some money, right now you have to pay your vendors, your suppliers. They're not going to take an IOU that somebody else that you allowed somebody else to take. So it's something that you have to pay attention to is how often are you collecting from your clients, right? Are they paying you within the terms of the agreements? And then at the same, on the flip side is the accounts payable, right? What you're paying out to your vendors, are you paying right away? Which, I don't want to discourage that. It's great that if you can pay your vendors right away, you want to be a good customer, just like you want good customers. And, you hope whatever you throw out into the universe will get paid back to you. But if you don't have the cash on hand to pay your vendors and your contract with them allows you to pay, 2, 3, 4 weeks or months, whatever it is down the line. So sometimes you have to take advantage of that. So, and so that's something that the people are not necessarily paying enough attention to is, are they actually getting paid by the people that owe them money? How long is it taking them to get that payment in? If you want to just throw out a little bit of jargon for a second, right? So basically, your cash conversion cycle is something that people have to pay more attention to in their business. And so now to define that, right? It's essentially how much time does it take from the day that I outlay the money to cover my expenses, to buy my inventory, to buy my supplies, to pay my workers, whatever it is. From the day that I pay that first dollar out, how many days does it take before the money comes back in, right? And that's gonna very heavily impact your bank balance. So I'd say that's probably the one that's the biggest issue that I've run into. Inventory can also be something that people don't necessarily notice. They think I didn't have any expenses. I just created my widget. I created the watch, the shirts that I'm selling, whatever it is. That's not an expense that shows up on your income statement yet. So even though you had to lay out the cash to pay for the materials, to pay for the workers, to pay for the machines, to build the product, when you're looking at your income statement, you don't see it on there until you actually sell the product, right? Once you sell the product, so then you get rid of your inventory and you're getting an expense that's shown on your books. But until that day happens, you don't see that expense on reflected as part of your profit. But when you look at your bank balance, you'll see it there. You'll see that that money went away, and now you've got a bunch of inventory sitting on your shelf. If it sits there for too long, so when are you going to get that money back in order to replenish your bank balance that you need?
Yeah, and it's interesting too because I used to own a manufacturing business where we had inventory, and now coming to a service-based business many years later, it's I'm so spoiled because there's no fear of inventory. There's no managing that number,
Yeah,
and it's a weight off my shoulders. I got to tell you. But the one
for
you said
sure.
before that with the accounts receivable, that applies to any business where you agree on a service and don't collect money for it upfront, or even if you
Yeah.
only collect half of it or whatever percentage. A coach of mine, a mentor of mine, many years ago in that business, he actually told me that he shifted from accounts receivable, which was the tradition in that industry for the longest time, actually still is to this day. He switched from that to cash up front before any production began. And the number he gave me, and you can fact check me on this because I'm sure you're more of an expert, is you can actually grow your business 7 times faster if you collect cash in advance rather than holding any accounts receivable.
Yeah, I would imagine that that depends on your business model and the industry you're in. I don't have any studies. I'm not a researcher. I don't have any studies on that aspect of it. But no, 100%. You need money to invest into the business in order to grow the business. So if that money is sitting in an IOU, it's sitting by your clients, by your customers, that's something that you cannot do, right? You don't have that ability to grow your business with that resource, that cash. I had one client that he had this growing accounts receivable balance, and we had no idea what to do about it. And we looked into it a little bit more. We did some digging, and we found that on his invoicing software, there was a little box on the invoicing software that said "Send invoice to client," and that box was defaulted to not being checked.
Awesome.
So he had all this revenue that was coming in, but the clients didn't know that they had to pay it because no invoice was sent. So it's those little things that sometimes can be a big difference and a big game changer in how a business succeeds or unfortunately does not succeed.
I bet his referrals were through the roof because people love that they could just buy things
Free
without
service.
paying for them.
Yeah, for sure.
That's awesome.
Exactly.
Well, we're going to use the 7X as clickbait. We're not going to fact check it. It was told to me by someone who researched it, and it was definitely true for that industry. But what I will say is this: so because I've operated both models, some people have the stomach for it, and some people just require it. If you work with the government or something like that, like people just require that you have terms. That's cool. For me, I'll never go back to terms, to accounts receivable. It is so much less stress to just get paid before you do anything. And then, what I will
Yep.
say is any service that we provide, it comes with a guarantee. I think if you can do those two things, it's like a credit card, right? Like if you buy something on Amazon with a credit card, worst case scenario, your credit card company is going to back you up and refund it. So it's the same kind of
Yeah.
principle, but everybody wins at the same time. So those are really good explanations.
Sure.
Let's talk a little bit about how you're measuring these 5 numbers, or you're managing these 5 numbers, these 5 factors. What's the frequency you like to look at them? Obviously, they vary with business, with industry, and in every unique business situation. But when you're consulting with somebody, how often are you managing these numbers and looking at the trends?
So for me with my clients, just the size that they are, I tend to look at them about once a month. Um, if you have a smaller business with a simpler model, you could probably get away with once a quarter, maybe 3 times a year, something like that. Uh, when you're talking bigger businesses, those Apples, those Googles out there, they're probably looking at their numbers every week, if not more often, right? So as your business grows and you're going to get different types of products and services that you're selling, and you're offering, different things that are changing in the market that are affecting you and your business. So you're going to have to look at them more often. So, but again, with the clients that I'm looking at, let's say $500,000 revenue until $5-10 million revenue, typically once a month is sufficient.
That's interesting. I actually thought you would say more frequently, but that's very manageable. I like that. Which is that's also where people get stressed.
The question is, how often do you want to try to, make changes in your business? How often do you want to, right? Because from my point of view, you're not looking at numbers just to see numbers, right? Some people that is what they want to do, right? They
I
want to
think
look
you
at
do that.
numbers and see, I'm making millions of dollars. Now I'm at 5 million. Now I'm at 10. They just want to see, right? They got an ego involved in seeing that number, and they'll look at it every day if you let them. Uh, from my vantage point is, let's unwrap what the numbers are telling us, right? What are we actually doing with this number, right? Yeah, I enjoy looking at numbers just wherever they are, but in terms of the work that I do, it's more of what's the number telling us, and what can we do within the business? What can we change within the business based on that information? And the information isn't necessarily going to change every day, every 2, 3, whatever. Once a month is enough where you can say, okay, there's something going right here, something that we want to take advantage of. There's something that's going wrong here that we want to kind of change, and that's once a month seems to be a good amount of time to assess where are you in your path towards the growth that you're trying to achieve, and what do I have to do to actually get to where I'm trying to go.
Yeah, no, that's fair, and that's a principle, regardless of money. Any number that you're going to measure it should be measured at a frequency that you're going to do something with it. I hear you with the ego
Yeah,
thing. People check their bank account every day. Look, I got another dollar in it. Like, good for you. Are you going to make a decision off of that, or are you just looking to look?
yeah,
But you, it sounds like, just based on the games you play, Sudoku, you look at numbers just for fun. Like you like to look at numbers.
do. I like I like finding a bunch of numbers and just making up math problems in my head. Um, seeing, yeah, if I see a string of numbers, I'll see if there's a way to connect the dots that it'll, like, I don't know, turn into something. But
That's the
that's
guy you want
that's
helping
me.
you with your finances, hands down.
But that's kind of the exactly where I can come in, because most business owners, you don't want to see the numbers. You don't care about the numbers. You're a plumber, you're an electrician, you're a who knows what, you're a lawyer, and you're not a numbers guy. You don't care. They don't speak to you in the same way, and you don't understand them. So whenever you do have to look at your numbers because your accountant's forcing you to or whatever, it breaks your head. And so that's kind of where I can come in and say, I enjoy it. Let me have a crack at it, and let's see if I can give you some insights where you can actually take that insight to grow your business so you can do more of the things that you actually enjoy.
Yeah, that's awesome, and that's the whole point of hiring any consultant, whether they specialize in marketing or in the area of financing your business or legal, whatever it is. It's supposed to offset the things that you are not good at and you don't want to do and will drain you, and also get somebody who knows what to do with it. I mean, if Avi's going to come
Yeah,
in and fix, manage these 5 things among, I'm sure, dozens of others, he'll know what to do with the numbers. And that's the same across any discipline, any consultant you're going to bring in. That's a tip I learned a long time ago when I tried to DIY things, then I screwed them up and I had to call in the experts to fix it. Cost a lot more on the
yeah,
back end. And I'm not just talking about
exactly.
business. I can't tell you how many plumbers I've called in my life because
Yeah,
I tried to mess with the pipes. Don't do that. Don't
yeah,
DIY your business.
exactly,
Awesome. Avi, this
exactly.
has been fantastic. I appreciate you coming. Your
Yeah,
website's on the
for
screen, but
sure.
we only got through 2 of the 5 really in detail. So I know you have a download on your website. Tell me about
Yeah.
what that is.
So the download really simplifies all of the numbers that a business can have in its financial statements. Just like there's five numbers for going from profit to cash flow, those are the ones that people don't really understand, and especially people who don't have a finance background. There's also five numbers to figure out how to grow your revenue, and five numbers to figure out how to get from revenue to profit and maximize your profit. So I have a free giveaway on my website. There's a link at the top of the website that says Prosperity Playbook. You can click that link. It'll send a form, and you fill out the form, you'll get it. And it's just a simple Excel where you can plug in your goals, your targets for the year, for the month, however you want to use it. I typically set goals for the year. You can set your goals for revenue, profit, and cash flow, and see which of those numbers you actually can hit, and which numbers you have to tweak in order to see how to grow your business the best way possible. It's kind of a simplified version of the system that I use with my clients, and it's a way that really it doesn't take an accounting degree to understand this Excel tool. It's really simplified so that any business owner should be able to use it in a way that's going to positively impact the growth of their company.
I love it. Finances for Dummies from the number whisperer himself.
Sounds good.
I'm so sorry to give you that title, but I really appreciate you
I
coming
like it.
and being a guest.
Yeah, I'm gonna rebrand, and maybe I'll get something on my wall here.
I love it. We'll have to have you back when that happens. No, this is awesome. Anytime we talk about numbers, some people get scared. If you made it this far in the episode, first of all, thank you. Go download that spreadsheet and see what you can do with it, because numbers are power. Numbers tell a story, and they also help you make really good decisions. So I'll tell you what, that's one of the first things we do when we go into a company. We consult more on the operations than the numbers, but we need to know what we're measuring to see how we're performing in whatever area of the business it is. Not always finances, but you have to understand what numbers you're using and where they're taking you as a business. And in the famous words of Mac Miller, I don't know if you're a Mac Miller fan, Avi, but people lie, numbers don't. So that was the worst way to end an episode, but we're going to do it on that and be super cheesy. But thank you, wherever you're watching, listening. This show is absolutely ridiculous, and we couldn't do it without you. We do it for you. Thank you for watching. Make sure you subscribe. We'll see you on the next episode of Harmonious at Lunch.